In the past several days and weeks, stocks like GameStop, AMC, and others have increased dramatically, and the common narrative out there is that this is because of day traders and people on Reddit and trading groups essentially pushing the prices up. And while this is probably what is part of contributing to this factor, I'm going to discuss why, kind of the real reasons underneath the recent rally we've seen. So stay tuned. Hi everybody, welcome back to The Contrarian. My name's Logan. I really like to talk about overall success and investing. So if you like these kinds of topics, just consider subscribing to this channel. Also, I'll make a disclaimer that I don't personally own any of these stocks. I'm not a trader, but I did actually own GameStop briefly, and if you had been paying attention, I think I first brought it up to your attention about 6 months ago. And in my opinion, GameStop was pretty undervalued at its, price around $5 to $6 around 6 months ago. And I actually did not write it up near as far as I could have, but I did benefit a lot from the recent rally we've seen. But today I'm just going to discuss why it's not really, it's probably not as much as it seems like it's being driven by day traders and people on Reddit groups and such. I think it's more of a strategy potentially being driven by institutional traders, and while that might not appear on the surface to be what could be behind this, why would institutions benefit from this? They're obviously losing money on the short side, and that's definitely true. There are a lot of institutions like Citron, like Melvin Capital, that are, probably going to go bankrupt as a result of this. And because of that, a lot of the traders out there are getting really hyped and getting really encouraged because they're like, oh, we're finally able to take down Wall Street. And I guess what I would really point out is before this massive squeeze that GameStop and AMC had, but mainly with GameStop, I'll just focus on that company. The institutional ownership of the shares of GameStop were very, very high. It fluctuated, around in there, but it was the majority of ownership of GameStop was institutions and large, billionaire level investors. Ryan Cohen, Michael Burry, Donald Foss were the kind of large name investors behind it. But institutions, there were institutions like BlackRock, like Vanguard, these kind of larger index funds and hedge funds. So it wasn't all the short side that was getting hurt. Or it wasn't the short side that was only having institutions in it. Institutions were also benefiting massively from this recent run-up that we've seen. So where I'm going with this is that I think that this will end up not being as beneficial to the average trader as they're saying. And Michael Burry has kind of alluded to this in a recent tweet that he sent out, that this, recent price move that GameStop has had is really dangerous. And, I think what he's really referring to with this is that kind of the euphoria that this has given to traders and to inexperienced investors is really toxic to the decisions that they make. Maybe they made it big with this one trade that they did. Maybe they got in at around 70 or 100 and rode up to 200 or something, and they doubled their money. And now they're just on euphoria. They think that they can conquer the world and they can send a bunch of other hedge funds into bankruptcy, who have shorted a bunch of stocks. And because of that, they've, now they're jumping in all these other heavily shorted stocks like American Airlines and all these other retailers. AMC was one to benefit yesterday as well, along with GameStop. But what I'm going with this is that the institutions that were long these stocks, and mainly GameStop is the one where they were long, they've benefited immensely from this rally. They'd be very dumb to be holding on to their shares still right now. In my opinion, a lot of them have probably sold, in the last several days. And who have they been selling to? They've been selling to all these new traders who are jumping in, and maybe they're putting, a few $100s towards GameStop and such. But in the end, it's extremely overvalued right now by any sort of valuation standpoint. I obviously sold a lot roughly about a week ago. I could have wrote it up much more, and hindsight is always 20/20, and I wish that I had. But even back at, $50, $100 a share, in my opinion, it was getting into the overpriced region, if not extremely overpriced region. And, around $300 a share, that's a full-fledged bubble right there. So in my opinion, this is a really harmful thing for new investors, for inexperienced investors, for traders, just because they're going to be stuck holding the bags eventually with all of these stocks that they've pumped up to massively overpriced valuations. It doesn't matter if GameStop was a good company, back 6 months ago. It was a good stock to buy, in my opinion, and I did benefit quite a bit from having it just the last 6 months. But in my opinion, this is really going to hurt a lot of new investors. And while there are some hedge funds that are going to go bankrupt because of the kind of dumb decisions they made, yeah, in my opinion, this isn't going to benefit a lot of investors. There are some, traders who've gotten out and made, several million off of this, and I think that's probably, few and far between. There's probably a lot more people who are going to get hurt by this in the end. So that's just my thoughts on this. Whole recent rally with GameStop and AMC and all these other, stocks that have been driven up immensely, hundreds of percent in the last few days. I just don't think it is exactly what it appears to be on the surface. So, yeah, if you like these kinds of topics, just consider subscribing, and I hope to see you again.